Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. This week, one of the dividend investing community's favorite dividend stocks got absolutely smacked. In this video, we're going to say, is this stock undervalued? We'll take a look at it through the metrics and then answer the question of, are we buying this dividend stock right now?
Smash that subscribe button. Give your boys a nice thumbs up on this damn video, guys. Let's break records. We're doing a giveaway. We hit 400 likes on this Saturday morning video, the first night of WrestleMania. We are giving out one piece of Dividend Diplomat swag from our swag shop.
All right, let them know. Make sure you subscribe and like the video below to enter. So what are we doing here? 2024, the market has been absolutely on fire. Although, to start Q2, laddie, the S&P 500's had a few red days. But let's not fool you. We're going to put the chart here. We zoom up year to date. The market is up. And that means a lot of stock prices are still overvalued, especially where they were entering 2024.
We're filming this, guys, on the night of April 4th. Yeah, we've had some back-to-back red days. People are interpreting the good old Powell stock, the good old Federal Reserve verbiage here, guys. Let's just say undervaluation is hard to come by right now. The market is still up year to date. There is a 67% chance this year finishes off positive, guys. And it's a presidential election year, which 80+% of the time it finishes positive as well.
Yeah.
But that doesn't mean that we just had a flash red day, especially on a day like today. Right, Bert?
Yeah, that's right. So that's why it's so important to have a consistent set of metrics and a consistent way to filter out the noise and focus on stocks that you are looking to buy. And that's why we run all of our investments through the Dividend Diplomats Dividend Stock Screener. 3 metrics: the PE ratio less than the S&P 500, payout ratio less than 60%, 3 history of increasing those mother effing divvies. And oh wait, there's a 4th bonus metric that we always throw in there, the dividend yield. It's key in times like these, we mean it, to have some set of metrics that you are always following and always reviewing stocks with.
Guys, this is what it's about. We're all in this together right now, trying to build that passive income stream, trying to buy stocks, trying to build that asset, trying to keep saving and keep investing the difference here, guys, because you got to keep accumulating those assets. And, there's a big healthcare stock we're featuring here today. No, it's not Pfizer. No, it's not Johnson & Johnson. No, it's not Eli Lilly, the stock that's been on an absolute tear. No. We're talking about a former spinoff entity. We're not talking about AbbVie Labs. Bert, who are we talking about?
AbbVie, ticker symbol ABBVIE. I meant it when we said it in the introduction. AbbVie is one of the dividend investing community's favorite dividend stocks. So what has happened? They are down 7% over the last 5 days. And when you go on X, you go on all social media, you see YouTube channels, you see a lot of dividend investors now saying, hey, AbbVie's down, time to buy. AbbVie's down, time to buy. When you throw the tweet out there, you say, what are you buying? Everyone's like, AbbVie's down, I want to buy. So you know what? We're going to take a quick look, see what happened, and see, are the metrics truly indicating if this stock is a buy or not?
And we're going to need to find out whose beard is stronger. Is it Bert's beard or is it Lanny's beard? Let us know in the comments. Like and subscribe. Let's get to 400. That's your ticket into the swag giveaway here.
Yeah.
But yeah, AbbVie, Bert. AbbVie this, AbbVie that. 7% down in the last 5 days. But Bert, this stock is still up. We have to keep in mind this stock is still up this year. So in fact, the stock is up over 101% in the last 5 years.
Yeah. So AbbVie has been on a tear, and we bought them. We haven't bought them in years because they've climbed up so much in price. So it's always fun on the dips. It's damn true. So what happened this week? When you look at it, there actually really hasn't been a lot of AbbVie news out there. The only article we could find, guidance. They dropped on a guidance update. So what were the only 2 things that you could really see here in the guidance? First one, I kind of laughed at this. They reaffirmed adjusted diluted EPS from 11.05 to 11.25. That doesn't sound bad, Lanny, if you're reaffirming the guidance, does it?
No, no, it doesn't. Not to me. But it includes a little bit of a, earnings per share impact from the acquisition that they are closing.
Ah, that's absolutely right. So once you start taking out the adjusted, the diluting, you start seeing the noise that's buried within this earnings release. You start seeing they're writing down some of their acquisition costs. They're writing down some of the progress from some of these things. Some of the acquisitions aren't working out that well for AbbVie, but that's kind of how the sector goes, right, Lanny? They spend a lot of money. You develop drugs, and sometimes if you can't develop them, you have to acquire the drugs, and some work and some don't.
Sometimes you have to write them down. Just go ask Pfizer. But they actually did reduce down first quarter guidance by a couple of cents per share because of the acquisition from Immunogen. Maybe a 4 cent rough estimate per share is what they're looking at. But hey, 4 cents.
Yeah.
Tomato, tomato.
Right. So did it justify a 7% drop over the last 5 days? Who knows? But a little bit of noise and a little bit of shock is always good for the system, and it's always good to run them through the screener when we do that. So we're going to do just that, Lanny. You want to take him through that first metric here, the price to earnings ratio?
Let's do it. I'd gladly accept the price to earnings ratio. Guys, again, it says AbbVie. They were trading at $167.90 at the time of this video. Earnings are still projected to be about $11.24, which is in management's range there. PE is just below. Again, PE, price to earnings, the undervaluation metric, for those that don't know, is below 15, which slightly higher that we've seen in the pharmaceutical industry, but definitely lower than the S&P 500.
Yep, that's fair. Their annual dividend is $6.20. It's a payout ratio of 55.16%, so a little bit below our 60%, on the high end of our perfect payout ratio range, which is between 40 to 60%. So it's a little higher, and from when I've looked at them in the past, they're typically in the 40s, so it's creeping up a little bit here from the payout ratio standpoint.
A little bit of that creep, which is going to negatively impact that dividend growth rate. 5-year average is just under 9% at 8.7%, and they've been doing it for 10 years straight.
Yep, ever since post spinoff, they've increased that dividend annually. That's always been the big thing with AbbVie. And interestingly, when you go back, what did AbbVie do with their last dividend increase here? We're pulling up the numbers. Let's see. Drum roll, please. They raised it by 4.7%. So it was below their average, slower dividend growth, kind of falling in line with some of the things that we're seeing with the news coming out, with a slightly slower guidance and a slight reduction here in Q1. With that, this big 7% drop over the last the last 5 days, the dividend yield has swollen to 3.69%.
Yeah, I mean, a lot better than where it was 5 days ago.
Yeah.
When you compare that to the 5-year dividend yield average of 4.41%, they're definitely not where they used to be at.
No. So to summarize here, the PE is 14.94, payouts 55%. 5-year dividend growth rate is 8.68%. They've increased that dividend for 10 plus years, and the yield is 3.7%. What do you think, Lanny?
I'm not a buyer at these prices. Unfortunately for me, it would, for me to get AbbVie's, to AbbVie to grab my attention, it would have to be in like the 140s.
Yeah, it's a long way to go. I was going to say that's more aggressive than what I was thinking. I was going to say their yield's got to at least be 4% for me, to even think about AbbVie. I'm
looking at a below, if I can get below a 13 PE.
Yeah. It's not to say it's not a bad stock, but I'm just not buying this dip the way everybody else is and the way other people are. I think there's still room to go before it's considered a truly undervalued dividend stock that's going to make it pop up on my personal watch list. But everyone, let us know what you think of AbbVie. We all make our own investment decisions. We all value stocks differently. Let us know what you think of one of the dividend community's favorite dividend growth stocks.
Yeah. What other stocks are you buying right now if it's not AbbVie? on the flash red days that we just had? Are you buying Starbucks? Are you buying Johnson and Johnson? Let us know in those comments below.
If you haven't already, subscribe to the channel, enter the contest, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.